Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Hantac Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now, obviously the key non-farm payrolls report on Friday has had a big impact on these markets, and that legacy has moved into this new week as well. We had that strong dollar move on Friday as that non-farm payrolls report beat estimates across the board, and that has sort of shifted the expectations a little bit in terms of monetary policy for the Fed. Not a huge amount though, but still I think the market has just driven a stronger dollar in the back of that, because what you tend to see is if the market is not anticipating a rate hike in front of or an imminent rate hike in front of the payrolls report, when you get a strong payrolls report, you get risk on and a strong dollar as well. So we're getting both those factors at the moment. So that's impacting across the Forex markets, across equities and also commodities. So moving into this week, we've got the China data already on Monday morning. We had disappointment from the trade data. We've got inflation tomorrow, and also the back end of this week we've got industrial production and retail sales as well. So lots could be dependent on this China data in terms of driving market risk appetite. But also we've got the retail sales for the US, and that's the next bit of key one data that we need to look out for them. But certainly at the moment we've got a risk-on appetite that's helping to drive equity markets higher, but will that continue through this week? Now, in terms of your Forex markets, where are we looking at? Well, as I said, we've got that strong dollar move that has had an impact across the Forex markets. We've seen euro dollar being dragged lower. However, this is still a bit of a mixed appetite, bit of a mixed outlook for the euro, because we're seeing a move back to the pivot lines, 110.50 to 111. Those are the lines that have been sort of pivotal on the euro dollar for the past 18 months or so, and it's still, I think, that they're in play, and the fact that the euro is trading between them on Monday just suggests that the market is still a little bit unsure exactly which way it's going to break ultimately, because you've got the near-term momentum from that strong dollar trade from the payrolls report, but as I said, will that continue? I think it needs to see a close below 10.50 to really drive a move lower. In terms of cable, again, another support is being tested, 130.60. That's the big floor for the last 3 weeks, and got tested intraday on Friday. The payrolls report in conjunction with also the loose monetary policy from the Bank of England really pulling sterling lower. Will sterling now break down? It's not done that yet, and it's testing it on Monday, but will it complete the breakdown with a closing break, or if you want confirmation of that, a 2-day closing break below 130.60? That would reopen the key lows of 127.96 again. In terms of dollar yen, we've seen the dollar yen rising on that dollar strength. Again, will that rise continue? Dollar yen has tended to be pretty negative in recent months, big downtrend channel. There's big resistance overhead, initially at 102.85, but then even bigger at 104 figure area. So it'll be interesting to see if we can see the dollar continue to rally through those levels. Now, in terms of your equity markets, we've seen a big breakout because as I said, when the market isn't anticipating a rate hike, it takes good news from the US as good news for the equity markets, and subsequently very strong payrolls report on Friday driving a big breakout on the equity markets. So S&P 500 all-time high, FTSE 100 pulling higher as well. 6,800 is the resistance area next to be tested on FTSE, and in terms of your S&P 500, it's above 2180, so that's a big move. In terms of your DAX, it's still trading underneath the resistance band, and it hasn't yet broken out. 10,474 is the resistance that needs to break through, and it'll be interesting to see again if that can maintain the momentum this week. For commodity prices, well, you've got the double whammy for gold really that we saw on Friday, with strong dollar and positive risk appetite. That dragged the gold price lower. Ultimately though, I still see that loose assumption monetary policy around the world could have will be driving support for gold, and likely that we're getting probably another central bank this week, the Reserve Bank of New Zealand, to cut interest rates again. So again, even further looser monetary policy from these major central banks. Again, that should be supportive for gold. So I'm still a buyer into weakness on gold. In terms of oil, we've started to see a bit of a rally. Will it come through? Will it continue? Because the risk appetite improvement has helped oil on Friday and sort of back end of last week. Again, The question marks are still over the supply side of oil, but certainly the demand taking a bit of a boost in the arm near term. But as I said, will it continue? So for the rest of this week, we're basically looking out for the economic calendar to give us the Chinese economic data, which will be driving risk appetite, but also the dollar data, the US data on retail sales at the end of the week. That Reserve Bank of New Zealand update is on Wednesday, Thursday, and Wednesday overnight, and it's likely to be sort of a cut in interest rates by 25 basis points, following on from the cut that we saw on the RBA last week. So I wish you good luck in your trading all throughout this week, and I will speak to you again next time.